All right. Today's SPY was down 1.34%, and we are finally getting that test of critical support down here at SPY 420. And I did a detailed analysis of why this was such a critical level, and I told you from here, I expect us to start back into the bull trend, back up towards 460. So now that we can see we hit 420 one day after I expected, let's go ahead and move that arrow over just a little bit so we can see the price action. And from here, we will track whether or not this scenario is going to play out by whether or not SPY is above or below 420. Now, if you're bearish and you're only interested in shorting and you don't want to try to buy off support, then you're looking for the break of 420 to tell us that we're likely going down towards that gap fill, which is just above 407. And that is also going to be this larger head and shoulders downside target. So that is a valid price target if we cannot hold above 420. Now, just going back to review the price action, below 430, when we had that breakdown, there was always a very good chance we were going to 420. Now that we're at 420, if you're shorting the market, I would highly suggest covering for profit because there's a very good chance, even if we get a bearish scenario, that we're going to see a bounce from here. And that could be a very powerful bounce that could take us all the way back into the 440s, even if we are going lower towards the low 400s. So 420 is a great level, whether you're a bull or a bear. This is a critical level that every trader should have on their trade plan. And it is going to be very important whether or not we are above or below this level. So you longer term swing traders, this should be your focus right here at SPY 420. And then for the short term, we're looking to see if we bounce from 420 to take us back up towards 427 to 430. In order to get bullish, we need to get back over 430 and then start forming higher lows and higher highs as we march higher towards the 440s. And eventually we will need to break out of this downtrending resistance trend line. So yes, this is still a downtrend on the daily chart, but on the weekly chart, there's still reason to believe it could be an uptrend, and that's going to depend on whether or not we can hold above 420. Now below 420, we likely flush down towards 417 and then the next level at 414. But I do think we need a bounce in the short term before we can go any lower. However, let the price action do all the talking, and if we break below 420, those are going to be your price targets lower. On the NASDAQ 100 triple Qs, we were down 1.75% today, and the first thing I noticed with the triple Qs is how they are still relatively the strongest. Every index made a lower low today, and you can clearly see the Qs did not holding up above that level at 355. Also, if you compare it to the low from middle of August, we are barely breaking down below it, and today we actually closed right on top of it. So when you see relative strength in the tech sector, it's very difficult to think that everything is crashing and burning, but there's always the chance the triple Qs are lagging and maybe they will start to break down soon, but they have not broken down on the chart yet. The breakdown is going to require a flush down below 355, and then we should easily get down to 347. And then if the bulls can't hold 347, we start down lower towards the 330s. So 355 is still the critical support, and if we break it, the equivalent of SPY 420 on the triple Qs will be this level at 347. So you have two critical support levels at 355 and then 347. Now, if we start to bounce from 355 and we break this high at 361, this will look like a double bottom breakout, which means we should easily fill the gap above 364, but more than likely we would go the full measured move higher into the 370 resistance. So watch these critical support levels because we're going to know very soon whether we bounce from them or break down, and your trade plan should be prepared for either scenario. On the Dow Jones, we were down 1.23% today, and we did close the gap right there below 332, so we can delete that gap, and below that gap fill, we were likely going to find support right around 331 to 327. You can see that 331 did not hold as support, so if we continue lower, we're looking for 327, and then below 327, we go down towards that gap fill at 322. If we start to bounce from here, we're still looking for resistance at 336 and 341. On the Russell 2000 IWM ETF, we were down 1.68% today, and the Russell broke that support at 174 and went down to the next price target lower, which is exactly what we were expecting. So below 174, we were looking for the gap fill at 171.56 and the bottom of the range at 170. Now, I will caution you, if you're still shorting the small caps, I would take your profits here, because I do think there's a very good chance from 170 we could start to rally all the way back up towards 180. Now, if we break 170, then obviously we're going to continue to flush. So if we break below 170 and you want to continue to short, then your next target lower will be down there right around 164. But wait for the confirmation of that break of support, because I do think there's a good chance we bounce from here and go all the way back up towards 180. On the ARKK ETF, we were down 2.74% today, and ARKK is also breaking down to a lower low on the breakdown below 38.4. And as I've said before, we are likely trending down towards that gap fill at 36, but in the short term, I do think there's a chance we are going to bounce and start heading higher towards 41. So manage your risk right there at that breakdown if you're shorting. If we start to break above 38.4, then you want to get a little more cautious if you're shorting because we may be bouncing up to fill the gap above. On the VIX, we were up 12.39% today, and the VIX did spike back above 18, and we hit our target at VIX 20, and VIX 20 is where we have been seeing the VIX getting crushed. So if the VIX starts breaking above 20, we are very likely going to be ending the bull market, which is going to be that confirmation with SPY breaking down below 420. So we're very close to knowing if this is just a correction within a bull market, or if the bull market is over with and we're going back into a bear market. We are going to know this information very soon. On Bitcoin, we're currently down about 0.5%, and Bitcoin is still rejecting from that resistance at 28,000, but the price action is still holding above all the moving averages as we develop a bull trend. This is a higher low, higher high breakout while we're trading above 27,000, and the next bull breakout confirmation will be the break above 28,000. On Tesla stock, we were down 2.02% today, and Tesla could not hold above that resistance test, which was that retest of the breakdown at 252, and we're right back down to the support zone in the 240s. If we can bounce from the 240s and break above 255, look for the gap fill above 262, and then above 262, we have strong resistance at 275. If we get above resistance at 275, we have the bull breakout, and we're likely going into the 300s with the gap fill below 290 and resistance at 296. If we can't hold support in the 240s, we're likely going to 230 and then the gap fill below 218. On Apple stock, we were down 0.78% today, and Apple's price action is back below all the moving averages. And as you can tell from the price action, Apple could not break above that resistance at 174, which is still increasing the probability we could get a rejection down to fill the gap at 167. That would likely be a bottom, and we would likely rally from that gap fill, but do not get bullish until we can break that resistance at 174 or until we get closer to a lower support zone. So jumping back over to the S&P 500, this is my expectation of what we are likely going to see in Q4, but it's going to depend on the price action holding this critical support zone. And if we break this critical support zone, we are very likely losing the bull market, which could mean we're going back into a deeper bear market, similar to what we saw last year. Do not jump the gun and do not assume the bear market is back just yet. We still need more confirmation from the price action, and we have very clear, well-defined risk levels. If you're a long-term swing trader that doesn't mind catching a falling knife, this could be your opportunity to get those low-risk entries, but you will need to take a loss if we cannot hold above these critical support zones. We are absolutely crushing this market on the Stocks Channel Discord and Bank Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.